Hello again. Welcome to another episode of the Uranium Market Minute. Today is Tuesday, January 4th, and this is episode number 57. My name is Justin Hune, and I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. Before we get into it, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing. And always take responsibility for your own choices. Well, I first want to wish everybody a very happy new year. It's been a couple of weeks since I did my last market minute, and I have to say that I have missed it. I did take a nice break, met with some family, had really just a very relaxing New Year's. The sun finally came out. It's been beautiful here in Southern California. And I hope that all of you had a wonderful time off, had a wonderful New Year's holiday, and are beginning the year off with some great intentions and some great blessings for abundance and good gains in the uranium markets. All right, and we're off to a good start so far. So hopefully that'll continue into the near term. We did have a couple of exciting pieces of news come in over the break. One is that nuclear has been included in the draft EU taxonomy along with natural gas. I believe that was intentional, that they were added together because the nation states that are likely to oppose nuclear, which would be Austria, potentially Germany, Spain, etc. There's a couple of others, are at this point pretty highly reliant on natural gas, especially Germany. And in order to vote against it, there needs to be a 72% vote against it. This is highly, highly unlikely to happen. And of course, if that kills it, then they don't have that EU taxonomy green allocation to natural gas, which would be highly beneficial for the entities that would be against it. So more to come on that in the coming weeks. But that's obviously a positive piece of news, one that we were expecting, and one that should have a nice tailwind for uranium, especially starting next year. Assuming this all pans out and it is set in stone, this is going to take a number of months. It would begin the actual allocation of low cost financing for green energies that are included in the taxonomy would begin in January 2023. Either way, very positive to see that inclusion. And the other is that we saw some dividend issuing by URA and URNM. So I'm going to get into that, and I'm going to talk about SPUT a little bit. Going to be a little bit of a different market minute. I'll probably bring up the charts briefly just to kind of show what I'm seeing. But other than that, I'm just going to run through and discuss SPUT and the ETF situation so you understand what happened during the last week of trading of the year. December was a very quiet month for SPUT. They only acquired 300,000 pounds for the entire month. As you can see from this chart, you can see that the bulk of the month they were trading at a significant discount to NAV. Only that last week or so of trading where they were at a premium to NAV, and the premium was pretty small. They still are at a premium to NAV as far as I can tell. And but it's really interesting to see and to look at months past and to see the substantial premium to NAV and the consistent premium to NAV they've trading at until about the third week of November. This is really what's kept them mostly out of the market. They have raised a little bit of money. Like I said, they did purchase 300,000 pounds of uranium during the month of December. But as you recall, they can only issue shares into the open market when they're trading at a greater than 1% premium to NAV. And they closed the month of December and the year at a 1.98% premium. So they're technically, ready to roll here. They very likely have issued a little bit of shares into the market today. I think it's possible they purchased some pounds. We're seeing a little bit of movement in the spot market. But this is just kind of a representation of what we saw for the past month. And of course, this has a lot to do with the idleness of the spot market going forward. I've mentioned multiple times of how we believe the utilities are largely out of the spot market at this point for multiple reasons, primarily that the spot market is quite thin, and any reasonable volume that comes into that seems to have an accretive effect on the spot price, which is something that the utilities are not seeking. That spot price has been moving the term price back August, September, October. And many utilities still have forward deliveries on contracts that are at least partially referenced to the spot price. So to the extent that the spot price rises, that's more out-of-pocket money, even for contracts that were signed years ago, having some partial reference to the market. This next chart, you'll see that SPUT's accumulation of U3O8 pounds dramatically slowed in the month of December. Change in the slope of the differently colored vertical bars here signifying the accumulation of pounds by spot. So you can see that was a steep rise from August into mid-November, and it's pretty much leveled off. And you can see where that action tends to taper is when the spot price tends to pull back. So interestingly enough, you can see that the spot price or the accumulation of pounds sort of slowed mid-September to the second week in October before it started ticking back up again. There's a little bit of a lagged effect between the spot price. Again, it tapered off late October, early November. Spot price fell before it continued to tick up again. And now we've had this month and a half kind of consolidation in terms of pounds accumulated, with the spot price slowly coming back. Interestingly enough, over 5 or 6 weeks of not a whole lot of pounds purchased, we haven't seen a crash in the spot price. A steep decline as we saw in late October, as we saw in mid-September. It's been mostly just like a very slow kind of bleed out with sort of a leveling off for the past 3 weeks or so. This is a pretty good sign, in my opinion. Lastly, I want to talk about the URA, URNM mandated buying before I mentioned what we saw over the past week in the trading action in the uranium markets, highly influenced by selling of the ETFs into a very illiquid market that is typically low volumes around the holidays. But as you can see, the action of the market back in September, October, early part of November was very, very supported by the mandated buying coming from the ETFs. Interestingly enough, the periods where the market has pulled back, where things have kind of cooled off a bit, the mandated selling has been relatively insignificant. Of course, we saw that little bit of mandated selling the last few days of trading of the year, influenced by the ETFs, and it was such an illiquid market that it had a pretty profound effect on the market. Obviously, this is a flywheel that works in both directions. And of course, if the selling that's coming mandated from the ETFs happens in a low volume environment, you can see higher percentage sell-offs, as we did in the month of December. Not a ton of mandated selling relative to the amount of mandated buying that has taken place in previous months, coming from that flywheel going up. Lastly, here's a graph just to represent the holdings of URNM and the amount of selling that the market saw in just a few days when they went ex-dividend. So essentially what happened with URNM is that this was a tax distribution, not technically a dividend, but it sort of acted as a dividend. This is a 5.9% distribution based on the closing price of $82.32 a pound, with a quote unquote dividend of $4.82 per share. The reason for this tax distribution is that URNM holds SPUT, and SPUT is classified as a passive foreign investment company. URNM elected to pass through the 2021 SPUT income and mark-to-market unrealized gains through to its ETF shareholders in the form of this tax distribution. So because of the way that SPUT is classified, the unrealized gains coming from holding that vehicle had to be distributed in this tax distribution or it didn't have to be that was what they chose to do, to the shareholders. So the shareholders essentially hold that burden by taking on that dividend. The size of that distribution required forced selling to fund at a very inopportune time, as I mentioned, very low volume trading the last week of the market of the year. So that was a substantial amount of selling that we can see here. That is why, if you weren't already aware of what happened in that previous week, it's important to understand why things are moving, whether that's up or down, right? And that's something that we always pay close attention to in these markets. So if we're seeing some substantial negative action, we want to know why, what's going on, what are the volumes looking like? So understanding that both URA and URNM undertook kind of this very sloppy selling during the last week of the year with very low volumes, basically just was not a really concern, knowing that things would essentially turn around in the beginning of the year, and they have. So real quickly, let's just take a look at the charts for a couple of uranium stocks currently today. URA, I noted a few days ago over the weekend in the weekly watch list that I update every Sunday for Uranium Insider Pro members, that I noticed a positive divergence in the RSI for URA. It looks like we're seeing a bounce in the market. We did see some selling off today after another opened gap up. The market opened up, it sold off throughout the day. It was actually down on the day for a moment there. Now it's sitting at 1.78% up for the day. This is a good sign. Volume is not huge, just nothing really to write home about, but I do like the look of this chart. It had a false breakdown of the 200-day here the last couple of weeks, just this undercut low, followed by a pretty instant recovery. And that's really good to see. You can see this big gap down. That was the dividend issuance that really hurt the market last week. But things are looking positive here, and I think this is a pretty constructive chart. Sprott, Physical Uranium Trust. This chart looks just absolutely coiled and ready to run. It's nice to see. We're seeing a little bit of volume come in here today. We're seeing a nice up day. We're 1.36% up. We did see the spot price move up a little bit as well today, but we still should be at somewhere between 1 and 2% premium to the net asset value here. This is a great sign. I want to see big volumes come into this before I really kind of confirm that we're just about to have another really strong run here. But everything is poised. The sector is poised to run hard here, especially I think the odds are on our side, considering that we had such a big consistent pullback from the third week of November into the end of the year. So the sector is sold off, it's based, and it's time for it to turn around. Cameco, the chart has recovered for a number of weeks here, really strong today, up over 4% on the day. Volumes ticking back up. It's nice to see that that Cameco is actually moving, even without the ETFs moving as much in terms of relative volume. So perhaps we're seeing some institutional positioning taking place in some of these large caps. All right, I'm going to end it there, you guys. We just published this morning January's newsletter for the Uranium Insider Pro members. This was a 30+ page newsletter with our outlook on the year going forward. As you can probably guess, based on the fundamentals that I've outlined in 50+ episodes of the last couple of months, we are quite bullish on the sector. This last 25 to 35% flush out in the sector really did a fantastic job of clearing out some weak hands, of getting the sector to kind of base after an extremely strong year. We had a very good year for 2021. We ended the year at 122% return for the year. We beat URNM by 50%, and we beat the broad markets by about 5x. So we're pretty proud of those returns. That's based on a balanced portfolio of uranium holdings. That's just the uranium portfolio. And we have a number of structured options trades that really performed extremely well last year. We have another one rolling off in a couple of weeks here. If you are a member, we will be giving you details on how to trade that correctly in the coming weeks. And we're obviously looking for other opportunities going forward. So there's a number of new positions that are on our short list that we are reviewing currently. And if you are a member, you'll be updated on that as soon as we decide to take those positions. But yes, if you're interested in receiving a sample newsletter from us, click the link in the description below and you'll receive a sample newsletter from the previous month, get an idea of the type of content that we're putting out. And of course, if you have any questions or comments, feel free to leave them in the comments for the video. If you appreciate these videos, please like the video, subscribe to the channel, hit the notification bell, and you will be notified whenever we update and post a new episode, which is almost every day. Should be here for the rest of the week going forward. And I'm very much looking forward to 2022 and another couple hundred episodes of the Uranium Market Minute, keeping you guys apprised of what's happening in the markets. I'm very encouraged by what I'm seeing in the markets currently, and hopefully we'll have another solid year going ahead in the uranium market. So thank you for tuning in, and we will see you guys tomorrow. Cheers.